Hello, I'm John Persinos, Managing Director of Personal Finance and his parent website, Investing Daily. The latest issue of Personal Finance, dated August 14, is in the mail to you and posted online. Here are the highlights of the specific, timely, and actionable investment advice that you'll find in your newsletter. In the first article, Jim Fink looks at the most promising initial public offerings of 2013. Jim pinpoints newly public companies that are poised for exceptional returns without undue risk. Simply put, the market for IPOs is back. Rock bottom short-term interest rates, quantitative easing, and unprecedented fiscal stimulus have all combined to create an easy money environment that is perfect for small cap companies seeking to raise equity capital by launching an IPO. As our in-house small cap stock expert, Jim reveals his favorite IPO plays. In the second article, I explain how waste management is a secular investment trend that's largely recession-proof, and I discuss my favorite waste management stocks. As human activity around the globe continues to generate staggering amounts of solid waste, you can profit from the investment alchemy of turning trash into cash. The world's growing garbage glut is a hassle for government officials, but it's an opportunity for investors to achieve defensive growth amid an accelerating but vulnerable economic recovery. I examine the two dominant companies in the handling, treatment, and disposal of solid waste. Both companies enjoy strong fundamentals and excellent prospects for outsized price appreciation. In the third article, Khoa Nguyen looks at the worldwide leisure and business travel industry, which tends to grow in tandem with economic recovery. The summer vacation season this year is shining on the domestic travel industry as rising spending on leisure and business travel lifts some of the sector's best-known companies, as well as the U.S. economy. Khoa spotlights two promising plays on these trends. In Growth Track, I discuss how signs of growth abound amid the latest quarterly results of our growth portfolio holdings. You know, much of the investment community obsessively pores over Federal Reserve Chairman Ben Bernanke's every pronouncement on monetary policy, like ancient soothsayers used to try to divine the future by reading entrails. Fed policy is important, of course, but rather than parsing cryptic statements, we prefer to get our cues from tangible earnings reports. To be sure, some of our growth portfolio holdings are encountering a few hurdles, but so far this year they're in solid shape and on track for market-beating growth. I discuss the latest operating results of our holdings as well as focus on this issue's best buy from the growth portfolio. In Income Report, David Dittman explains how better growth equals higher rates. He shows us that an improving macro environment will lead to higher interest rates, and in the grand scheme of things, that's a net positive. He also emphasizes that the single most important factor for dividend-focused investors is the direction of a given company's payout rate. Is it rising, stable, or falling? A rising payout is the surest sign of a healthy underlying business, as it validates solid performance and also indicates management's confidence in future operating conditions. In this context, David looks at our income portfolio holdings as well as his best buy for income investors. In Fund Focus, Chief Investment Strategist Philip Springer looks at exchange-traded fund opportunities in foreign markets. Good values, plump dividends, and better growth prospects point to a rebound in lagging overseas markets. Phil reveals the best ETFs for you to profit. And in On the Money, Tom Scarlett shows you how to adjust your portfolio as retirement approaches, with a step-by-step plan for making the switch from growth to income. It's all in your latest issue of Personal Finance, now in the mail and posted online. I'm John Persinos, wishing you many happy returns. I also urge you to continue sending us your comments and feedback. Our investment analysts all strive to respond to your queries on a timely basis, because after all, our number one job is to help you make money.